Welcome back to Market Day Report. I'm Chris Swift. Let's take a look and see what the grains are trading at now. All getting prepared for the WASDE report coming up. Seems like there's a lot of hullabaloo about that coming up, and the markets don't seem to really pay much attention to it. I got March corn down 1 1/4 at 433 even. I got the May down 1 1/2 at 445 even. July down 1 3/4, 453 3/4, and new crop December down 471 3/4. Let's take a look at our soybean market. It had been firmer, still holding on to a few of those gains. March up 11 1/2 at $12 1/2. Note that we've got just about all those contract months for this year back up above 12 again. The May at 12.06 3/4, up 9 1/4. July contract up 8 3/4, 12.15 3/4. Take a look at the November new crop and see what they're doing, and they're a little bit firmer too, up 7, 11.77 3/4. That'll be a big one to watch today because we kind of already know what we have on hand, but it's what's coming up is going to be real interesting. So let's take a look at Chicago wheat. It had been a little bit firmer as well, lower, still lower. March down 10 1/2 at 591 1/2. May down 11 at 597 even. New crop July down 10 3/4 at 599 3/4. Kansas City hard red winter wheat down 14 3/4 on the March at 603 1/2. That's just a half off the low. May down 14 1/4, 601 1/2. New crop July 595 3/4, down 13 3/4. And we'll wrap it up with Minneapolis spring wheat down 12 on the March now at 684 1/4. May down 10 1/4 at 685 1/2. And I'd like to invite my next guest back in. It's Ted Seifried. Ted is with the Zaner Ag Hedge. So, Ted, certainly do appreciate you taking the time to be with us this morning. I know that we've seen the wheat market get a little bit soft. Is that rain coming in and the lack of the real cold that was supposed to be there?
Rain coming in, lack of really cold, and really no expectations of a tremendously bullish report in wheat, right? There's no need for short covering in wheat. And also, you've had some strength in wheat the last couple of days. If you look at what wheat's done since the end of September, Chris, we have been in a rather tight range, but the average price has been like 601 1/4. We seem to trade that price every day. It's been absolutely sideways in wheat. You have 2 up days and then you have a down day, and we always gravitate right back to that $6 mark, or that cluster of moving averages that we have between the 10, the 20, the 50, and the 100-day, all trading within 6 cents of each other, really, Chris. And it's all right here. So the wheat is a fairly lifeless market, Chris. There's really not much going on there. It's all on the row crops, and that's all focused on, what's going on with South American weather. I'm going to say export sales, although for the moment we're kind of ignoring that. That might be the bigger highlight at the end of the day, right? I think for right now, we saw the CONAB numbers. And by the way, I think it's important for the CONAB numbers not to look at the number they're using, but how much they came down from their previous number. That's more than what the trade is expecting from the USDA today. So I think that triggered a little bit of short covering in soybeans coming into this report. But if this report isn't surprisingly bearish, I think a lot of those come right back on, because then we'll focus back on the export sales, which for the third week in a row are absolutely terrible. And listen, it's one of those moments where if a tree falls in the woods, does it make it sound if there's nobody around? Well, if there is a drought in Brazil, does it make a difference if China's not here to buy? And honestly, I think that is the case. If we don't see that big influx of export sales, it doesn't change our domestic balance sheet. Probably doesn't change the global balance sheet, because it suggests that the Chinese demand is just not there.
Well, and I keep hearing that more and more, and I've read several articles of the issues that they are having there. That doesn't seem like anything that's going to be cleaned up anytime soon, does it?
Well, you heard it here first, Chris. But no, listen, I've got a theory on this, and we've talked about it a few times. I think they're changing their feed rations, right? For the longest time, they fed it in an inordinate amount of soybean meal because they like that fatty protein to get that marbled, fatty pork product that, like we like on our steaks. But with their economy struggling and with their pork prices being low and the demand for pork being low, it's because their consumers are having a hard time swallowing the prices. Well, the best way to deal with that is lower input costs. And China's been talking about this for 5 or 6 years, Chris, where they want to reduce their global dependency on soybean imports. And the best way to do that is to change the feed rations that they have. I think they're getting that done right now. And if that's the case, Chris, we're staring down the barrel of the first time, at least in my career, where we have a significant, profound change in Chinese demand to the downside. which could occur over the course of a few years. I hope I'm very wrong about that, Chris. But you look at the record import of corn that they've had this marketing year after what they say a record corn crop that they had, and then the lack of soybeans that they have on the books for April, May, June, and you say, something's afoot. And then you remember all the talk that they've had about changing those feed rations, and you say, wow, I hope this isn't the fruition of all of that conversation or those threats that we've heard from them for a long time now.
Wow, absolutely. That's great information. I certainly do appreciate you sharing that with us, Ted. Stay with us. We're going to go away, take a real quick commercial break. We're going to come back and talk a lot more about livestock. Stay with us. Welcome back. Let's take a look at where all the optimism is in the futures market today, and that still tends to be in the cattle market. Although we've softened just a little bit off the highs, we're still up $1.72 on the Feb at 183.95. That high was 184.67. The April up $1.65 at 186.45. June up 1/2 at 183.70. And the feeder cattle market looked like it held on to some of those gains. Still up 2.5 on the March at 248.05. That's a little over $1 off the high of the day. April up 210 at 253.30. And the May contract up $1.72 at 257.62. And we'll wrap it up with the hog market. Hogs are soft this morning. I got Feb down 20 at 73.17. The April contract down $1.10 at 80 even. And June down 97 at 94.60. I want to ask Ted to step back in for just a second. Again, we were talking about hogs just a little bit as we left. Look at the cattle market. That is one of the most optimistic trades I've seen in a long time. Yeah.
Well, the word of the week, Chris, is volatility. We're up sharply one day, we're down sharply the next, and up sharply again the next day. Really, when you go back to the middle of December lows that we had, I think we really overshot the mark to the downside. Now we've gotten back to what I'm going to say is a lot more what I'm going to call fair value. The thing is that we've got a V bottom and we've gone straight up. We could be due for correction at some point. And when you get this sort of volatility, big swings in opposite directions from one day to the next, it could be suggesting that we're getting ready for that sort of correction. Even still, though, I'm still really bullish on cattle fundamentals, feeder cattle in particular. I still think there's more upside potential, but I'm not ruling out the possibility of a bit of a break in the shorter term, just based on the bigger wild swings that we've been seeing the last few days.
Yeah, and I kind of look at it from consolidation. Again, big move down, big move up. Next most probable move, we can kind of continue to consolidate because we still got one key ingredient that's left out, and that's that actual cattle feeder bidding those cattle up to those prices yet. So we still got a lot of convergence of bases to take place there. Ted, really do appreciate you taking the time to be with us this morning. It's Ted Seifried, and he's with Zaner Ag Hedge. And Ted, we're getting closer and closer to the WASDE report, and anxious to see what that's going to be like.
A little over an hour, yeah. We'll have you come back in and kind of break it all down.
All right,
for
look
us.
forward to it.
All right.